important right now. So starting tonight, we're doing a two-part session because I don't think there's any way in the world that I could personally go through this information in 1 hour. And I don't think for a webinar for many of you folks who have come here from TradeStation, how many people, well, it's not important, but I know tonight I promised that I would in this two-day session, cover Person's pivots, why they're so vital, especially with that moving average component, how they help people, and also what trades and stock trades are setting up, because I'll tell you what, I think it's been really rough out there for a lot of people. I think a lot of folks have thought the stock market was very confusing. You have a lot of, I guess, I don't know, from what people tell me, different technicians. I don't know what they're looking at if they're a technician, but they think the market's overbought, and they think the market's due for a correction, and you know, we don't always get every trade right, that's for sure, but we make calculated estimates, we make calculated trading decisions based on different sets of tools. And what I wanted to share with you is, and I know that a lot of folks, one thing that we talked about this morning in TradeStation, and I've got a checklist and I got a PowerPoint presentation to go through. I make sure everything is in order. I want to go through what sectors are looking good and what my opinion has been, and so far my opinion's been right, that we're going, and it's been right for a while, and I think what we're seeing is a sector rotational correction in the market, and I think we've just revolved from one sector to another, and we've seen some sectors this year alone, like look at the utility space, utility stocks. You know, I mean, these things they're low beta, they're not a big mover, but boy, I'll tell you what, in the last 6 weeks, big move again this year. Energy complex, again, the first week of February, you look to buy energy stocks. XOP had an amazing run. So we've had some pretty predictable seasonal trends, and I think coming in, what's really, really neat, folks, is that in March, at the beginning of March, we have a whole shift of different sectors that start to begin to enter a seasonally strong period of time. And, you know, in the news, you know, many people may have missed eBay. Well, we didn't, and Sears, and now they're talking about JCPenney's. And, you know, we were talking about one of the amazing things is that most of these components have very strong seasonal tendencies, especially Sears. You know, is it too late to get in? Listen, I can just tell you that every year for the last 11 years, if you got into Sears at the end of January, it generally has a trend move going into the high of April. So it's a seasonal trade that it's just an amazing thing. We've written about it. We've been on in the media about it. And here again, we've been able to benefit from it. And then, you know, the funny thing is that the news, I think, doesn't really report what might happen or what the historic view of the market can be. They always tend to talk and hype up a market after it's had a big move. Or, hey, look at this sector. It's really getting damaged. It's really getting hurt. I don't know if you've been noticing that if you listen to the news or listen to other traders or listen to newsprint, magazines, et cetera, TV. But, you know, I look at some of these stock opportunities when they're in a downtrend and they say, oh, look at big sell-off. And I don't know, first thing I want to ask myself, is it one stock or is it multiple stocks in a sector? Because if it's multiple stocks in a sector, I want to know if they're getting beaten up. When do they normally get beaten up, and when do they normally bottom out? And is there a seasonal trend to them? If you think about what happened today with Janet Yellen, she was very friendly to the little, you know, the average American. She was very sympathetic. She talked about the unemployment rate today not being full employment at 6.5%, because no one in their right mind believes 6.5% is the real unemployment level anyway. But more importantly, she was pretty much out there to say, yeah, we're not going to really change our, you know, we're not going to be raising rates or tightening credit. That was very bullish for the consumer. Did everyone see that? Did everyone notice that? Well, the funny thing is, if she's there for the little guy, then number one, and comes out in public speaking and says she's out there for the little guy needs to get a loan, and the little guy gets a loan from a bank. And usually the little guy in little, you know, part of the country gets a loan at a regional bank. So you know, if you put one and one together, you'll probably notice that the banking stocks, and not just your Citi and your bank and your Bank America and your Wells Fargo or your JP Morgan, because the media loves Jamie Dimon, I don't know, the New York guy. But I'll tell you what, the investment aspect is that if you've also noticed the housing sector, Pulte, Lennar, Toll, D.H. Horton, home stocks have been on the rise. In fact, I am long some home stocks, and we are actually looking to take a profit on that sector. And I'm here to share with you, to connect the dots, to say, listen, I think if you're telling me, and I see a bunch of people posting here that it's been rough, it's been rocky, you know, I got news for you. It's actually been, you know, fairly. It's been kind of tricky. I'm a petrified bull, don't get me wrong. I'm not a penniless bear, but I'm definitely been a petrified bull. We've been playing alongside of certain stocks, low risk, and in high percentage performance seasonal tendency areas. And that's what I'm here to discuss with you tonight, because I think I can help you, and I think I want you guys to understand that there are specific technical tools that you can watch and use if you're trained properly, to give you a better educated idea so that you can make a better trade decision. And instead of following, who do you follow? And you look at the news and you think, you know, it's really hard as a trader not to look at the news. It's hard. And I got news for you. I think the neat thing is that we see a lot of sectors moving almost like a simple shopping list, and I've got some tools here to help you with. The first thing I wanted to uncover is the myth of how volume actually has been a helpful tool. How many people, and I would love to do this poll, but if I do, it's going to upset the recording in the Apple Cart, so I'm not going to do it. So just do me a favor. How many people have struggled with volume analysis, looking at histogram and trends of markets? How many people have said this has really been a problem? How many people can say, yes, they've kind of had some problems looking at volume histogram bars? A lot. Yes. Well, probably not before I've introduced many of you to an indicator called on-balance volume. So we got some repeat offenders. I see Fred Bradley. Fred, great to have you here tonight, by the way. You know, I did this little presentation even this morning. Every week I do it for TradeStation. So in any event, I wanted to say I've got. If you're confused, you should be, because I don't think the logic behind why it's not working well is because of all the ETFs that we see a lot in the marketplace. Let me go over to a different page here, if you don't mind, and we're going to get everything wrapped up in 2 seconds. All right, I'm going to take a look at this different page. Now, this is my Genesis package. And I have a lot of different analytic tools. One of the things I want you guys to take a look at is at the very top is every one of these top charts is a daily chart. All right? All I've got is the S&Ps, and I use the ES rather than the spiders, the NASDAQ versus the Qs. This is the Russell, IWM. I'm going to change that back to the Russell. I switched it earlier today for a different reason. This is the Russell. This is the New York Stock Exchange Composite Index, and this is the YM, the Dow. The reason I use the futures versus the cash in these particular indices, it allows me to see a better chart pattern based on lack of overnight gapping type of things. But the indicators, what I want you to see is that the top row is daily, the bottom row is weekly. Same stuff, same indicators. So let me just share with you this one little chart here. This is the S&P 500. This has the person's pivots. This is actually a quarterly pivot here on my tool. And I'm going to just, actually we can just get rid of the pivots for right now. I know that hurts my feelings, but I'll live. So let's just take a look at the S&Ps. And what you're looking at here on this chart are a price action with my PPS. These are my buy-sell indicators. The middle fuchsia color, it says an advanced decline comparative ratio line of the S&P 500. All right. Underneath that is on-balance volume, and that is a volume indicator that helps to find trend. Okay. So when the market moves, it helps to define the the trend on advancing days versus the trend of declining days. All right? So basically what we're looking at is a volume, and there's open interest here, which is, you know, useful as a tool to gauge the amount of longs or shorts net open positions in the futures. All right? It's another separate tool. Underneath that, we have a seasonal trend tool. So if you notice, if you've been saying that you've had trouble and you've been struggling with volume, very simply, I mean, take a look at the advanced decline in this little segment of the market here. Take a look at the on-balance volume of the trend here. And then when you say, yeah, John, this volume histogram stuff, it's just really, it's perplexing me. And if you notice, the volume here is moving lower. So what my theory has been for a number of years, and I mean since 2006, 7 in that time frame, is that I think that more and more people are using optionable strategies. Less people, they're also using more of the ETFs, and so you can be you're able to mask the trades instead of going to the underlying market like you used to. And back in the old days when Edwards and McGee and all the books that were written, and I think that's the problem with educators and people that get educated somewhere else, is that, you know, guys picking up a book that he read from 30 years ago and not thinking it through what the logic is behind why volume's not as important. And one of the reasons is that number one, I can sell a put and buy a call, and 30 years ago people didn't do that, right? Options were considered a gamble. People really didn't trade options as much as they are to this day. And if you look at this amazing difference in this trend of the market right here, in this segment, when the trend of the market was solid trend up, there's no doubt that's a solid trend of higher prices. I mean, you just be real simple and I guess parochial about it. Trend up is the fact that we have majority of these candles are all green, right? So it means and signifies that the close is greater than the open, but you can definitely see that there's a rise in price. And the funny thing is, you have a very similar situation developing here. Oops, I got a little too whacked crazy with the green there. But we have a very similar situation here. But the funny thing is, we have a very similar situation with the on-balance volume and the advanced decline. And here we have the same situation, same scenario, lower volume. So if you think that you are confused and it's been, you know, maybe keeping you from making better trade decisions, you're not alone. I think the number one tool that can help you out would be using on-balance volume, because it doesn't hide the fact that if the market rallies and moves up, it's moving up, and every day it goes up was the volume higher than the preceding calculation. So in simple terms, to define if the trend is strong, is it have a move in a volume associated with it? The answer is, in the trend of using on-balance volume, yes. And the volume histograms, I'll tell you truthfully, the volume histogram bars are good to maybe uncover if a particular day was on high volume or not, like maybe a capitulated sell-off, or maybe perhaps a reversal to the upside, a one-day wonder. But even in this small little market move right in here with the trend, even at that point in time, you know, this would have fooled you thinking that, there's no way this market's rallying. There's no volume behind it. So I have to say, if you're confused in the essence of volume, I think, number one, tonight's webinar, first and foremost, just introduced you to an indicator on balance volume, something I've been teaching and preaching for a very long time, and it's been an incredibly useful tool in helping me to determine whether or not there is volume actually associated with the price move or not. So in addition, I know a lot of people are saying they're very perplexed with the market, and you know, there are certain tools that are unique to each respective market, such as stock indexes. We have advanced decline work. Most people are familiar with advanced decline work, but many people aren't familiar with the advanced decline comparative ratio line. But simply put, for you new traders out there, and I know there's some self-proclaimed educators out there that, you know, they want you to look at the typical indicator. you know, the MACD, the RSI, the stochastics, the Bollinger Bands. It's the same stuff. And, you know, those are very useful tools in their own rights, don't get me wrong. But if you're looking at a 10-day moving average and a 20-day moving average and you have a MACD, you're pretty much looking at the same indicator, because the MACD is at 12 and 26 versus a 9 based on the histogram. And I'm probably talking too much technicals for you, and I apologize for that. But some of you guys know what I'm talking about. And if 80 to 90% of the people lose in the market and they're all using the same tools, and if you guys are struggling using volume, I got news for you. I think tonight's webinar with our follow-up on Saturday is going to give you a good insight and at least share with you how we could develop a better analytical outlook. And I always felt, and how I was taught, and in case you didn't know, we'll get back to this in a minute, I was always taught in the market when I first started, and as we start to begin right now, I'd like to first say that we want to take a moment to look at this important disclaimer. First and foremost, I'll take a second here and read this disclaimer over. It basically states that trading is risky. All right. Now, a little bit of history. When I tell you that when I first got in the market, it was a long time ago. I've been around for over 34 years. I started at the floor of the Chicago Mercantile Exchange as a runner in 1977. I've been around the ropes in this game, kids. And you know, I'm a member of APTA, which is, you know, a pretty decent organization, and I've been 33 registrations. We've gotten a gold medal trophy for some of my work in technical analysis. Many of you have seen some of these books before. When I talk about the last conditional change candle, when I talk about Person's pivots, PPS, a lot of this was written in this book here, which was my second book, and that was published, I think, in 2004, late 4, written in 04, maybe published in 05, excuse me. This book won the Stock Traders Almanac Book of the Year Award, and I've been a contributing editor to the Commodity Traders Almanac. So I've been around a little while. I've traded, I've managed money, I've owned brokerage firms, created systems. I've done it all. In fact, I think out of everything that I've achieved in my lifetime in this industry, besides being voted in as a member of APTA, you just don't join like the MTA, the market technicians. You got to be voted in, and it takes 3 people to vote you in. You know, I'd say the pinnacle of my career was having the 47th issue of the Stock Traders Almanac dedicated to my work and myself in the field of technical analysis. So I was very moved by that. Very neat honor. You know, out of all the traders in the world, 47, this is like the oldest publication. Yale Hirsch, who started this 47 years ago. That's one of America's oldest financial running publications. It's really amazing. But the moral of the story is, what can I do for you? Why are you here tonight? You're here tonight to get a solid bout of education, find out what stocks are appealing, looking good, what sectors maybe we want to focus in on, and how you guys can do better at your own stock picking. That's what we pretty much promised you, okay? So what I'd like to tell you is this. Number one, a lot of software companies I've done a lot of consulting with different vendors on all different things, and if you know, many of you guys, we're going to do, and because I know there's different users. We've got TradeStation. We got my friends at TOS, Thinkorswim, and you know, my indicators on TOS and the insights that I've given on other indicators that are built into TOS. You know, besides TradeStation, Trade Navigator, and I think one of the neat things is that these are tools that are applicable in all market conditions and for all walks of life. In fact, even in our own work, I do it. Many of you might be familiar with my partner. We have an advisory service, a stock advisory service. It's called PA Stocks. It stands for Person and Asprey. And Tom Asprey, my partner at PA Stock Alerts, he's another old-time technician. Tom actually, if you guys have heard of the moving average divergence indicator, which was created by Gerald Appel, that's the MACD, otherwise known as. Actually, it was Tom who actually created the histogram component. He came up with the idea to create the histogram component. So Tom's been around a long time, and between the two of us, just to let you know, last year, if you think last year was tough, in our stock advisory service last year, we were up 100% on stocks, not options, stock picking. This year alone, and I want you to take a good hard look at this list, because we're going to talk about this list in just a minute and how we came up with some of these names. And I want you to stay focused on what some of these names represent. So this is all our trades that we've just done this year. And as you can see, we have some open position, one of which we're getting ready to close out, which is Pulte Home Group. So if you notice here, we had gaps. Gap, just to let you know, we're not always perfect. We don't always get it right. Gap went down, stopped us out, and then zinged right back up in our face. But if you notice here, we've had a couple stocks that we probably wish we would have held in. Kimco is a realty company. Exelon is a utility company. XOP, oil and gas. Transportation. POM is a utility company. PCG was a utility company. FCX, metals and mining. BK is Bank New York Mellon, they're more money management. BBT is a bank. Joy Global is in the material sector, and we just entered in, as you notice here, the KRE. KRE is an ETF that represents the regional bank sector. So far this year, both closed trades were only up 18% for the year. And as far as our current open positions, it would mean we're up, as of today's close, up 31.5%. And that's this year. These are our trades. And how we come through in stock picking is real simple. You don't see a lot of high flyers. We have a very select entry. We've missed some trades because that's the way it happens. You put a bid in and you don't get filled and the market moves. I want to get back to that list because notice that we had the banking stocks and we just started to pick these up. But the first thing I want to mention is we are going on a cruise, and we do have some people that want to split rooms. So if you're interested and you're single and you want to split a room, then you can contact us. But that's about the only announcement that I'm going to make tonight, just to let you know. This is a 7-day cruise. You want to find out more information about that, just contact our office. Say, send me more information on that. All right. So let's get started. Trading priorities, directional ideas. As you notice, I started in a business a long time ago. George Lane was my mentor. I worked for Uncle George. He created this indicator, stochastics. Many of you know this. It's an old story. But for those who don't know, I was always taught on a basis of being directional and going with the trend. So if the trend is your friend and you're going with the trend, then you're a directional trader. And so then we would look at what kind of a trading strategy would put together, what kind of execution, your entry level. Are you going at the market, placing bids? Are you stopping yourself in? What type of entry technique are you using to get into the trade once you've identified that you want to be in a trade? And of course, trade management, your stop, your risk, your reward target, and then, finally, position sizing. You know, the old adage, whenever you're right, you're always in 1. Whenever you're wrong, you're always in 100. And you got to be understanding of what the mathematics is behind being properly positioned in every trade. You don't get positioned in a trade based on the capital required to do the trade. You should be formulating a systematic approach based on the risk or the proposed risk of the trade. So that's one of the things. Like, for example, cattle. We did a live cattle trade today in the room. And we've been looking at live cattle for a trade because coming into the first week of March, cattle has a seasonal tendency of going down. Now, it just had a rip to the upside yesterday, almost a limit up move. It's just blown through the top, right? And we were looking for a higher level to sell or a breakdown to get short on. And we ended up with a breakdown to get short on. Now, the funny thing is with cattle, and many of you are going to be really bored about this, and I know that, but the margin requirement on cattle is like $1,000. And then the move gave us like per contract today, about a $360 move in less than under an hour about, all right? So the moral of the story is many people, they say, well, sheesh, it's $1,000. I got a $20,000 commodity account. I'll do 10 of those. Well, the problem is your risk might have been $250. So what if you're wrong? You don't look at what the margin is to do that position. You look at what your risk is. Anyway, that'd be another topic for another time. But position sizing is everything when it comes to trading. Now, the indicators in the studies I use, real simple. Number one, seasonal analysis. And that's what we're going to talk about tonight and Saturday. And of course, person's pivots. And some of you don't know what the heck person's pivots are, how they work, why they work, and how you can use them. And I'm here to tell you, person's pivots is not just pivot points. It's actually an indicator that gives you an idea of whether the market condition is bullish or bearish. And that's what everyone needs to either understand or relearn. We use person's pivots in multiple time frames. I recently released in that green book, the Mastering the Stock Market, a technique I've been using for about 3 decades that I never really talked about before, and it's using pivots on a quarterly basis. And they're very powerful. It gives you a little bit longer term outlook on the condition and the market. I used the quarterly pivots in the interest rate markets when I traded the bonds, because back then interest rates moved. Now I use pivots on all different markets, and they work amazingly well in the higher degree time frame. For you options traders out there, a quarterly pivot will give you a look-see at what the potential support of a market might be that any other pivot might not. And if you don't know what pivots are, I suggest you come to our website and go read up on what pivots really are. And I think there's a lot of great information on our website that you can go over there and just do a little extra homework. We got some free videos and stuff, and you got a pivot calculator, and you can find all about that. When it comes to stock indices, as I was alluding to, I also look at what I call, or is considered to be, health and breadth studies. Health is what the volume is. Breadth is the participation, which is what we use the advanced decline comparative ratio lines for. And then momentum, closing prices compared to past price action. Momentum, where's the market's price now as it relates to past price action? That's one of the things about momentum. How far did the market move and how short of a period of time? Remember, on a chart, we've got the X and the Y axis. They're there for a reason. Time and price, they're there for a reason. And I think time is often misunderstood with a lot of traders. And then I do look at spread pairs, or some of you stock traders would be hearing a pairs trade. We called it in commodities a spread trade. And in technical analysis, we call it relative strength analysis, RS analysis. So this little chart here doesn't give you everything, but it tells you that you can look at a comparative ratio line on what the different sectors of the market, and you can measure what sector is starting to move up, or what sector's over or underperforming relative to the others. Thus the name relative strength analysis. Okay? Now, let's sink our teeth into dissecting what's been going on in this world. And everyone's been saying how crazy it is, and the consumers aren't buying because the weather is bad. Well, the funny thing is, this is a seasonal trend chart, and this is based off the XLY. Now, you guys have been hearing, this is not, I don't think I'm making this up, but you've been hearing about how the consumers are not spending money, and the weather is bad, and the economy's bad, and the consumer sector's bad. Is that more or less true? Is that what you guys have been hearing? Sal, back here, Bay, thank you very much. Indeed. Well, the funny thing is, guys, from on or about after the holidays are done, consumers are a little tapped out. See this little gold trend? It moves down. It moves down going into on or about the 3rd week of February. The consumer discretionary sector typically doesn't do well this time of year I don't care if it's 1984, if it's 1998, if it's 2003, 1999, the consumer sector typically takes a breather and has a trend lower. So when the news has been beating into your mind that, oh, the economy's horrible, the consumers aren't spending, it's too snowy here, it's too cold there, hey, guess what? It's a seasonal downtrend. But I got good news for you. That on or about the first week now, going into the first week of March, that all changes, guys and girls. We start looking at buying opportunities in the consumer discretionary sector, all right? And what's the biggest consumer discretionary purchase that could possibly exist? Buying a home. And if the home builders are going up, that means banks are making loans. And if someone's buying a house, and you got to think through the process, because I don't think the media helps teach people the logistics and the logic behind what it takes to make a commitment to buy a new home. You don't wake up tomorrow morning, nudge your wife in the shoulder and say, honey, let's go over and have them build us a new home. You plan, you put finances together, you meet, you pick out what style of house, you get the credit approval. There's a process that you go through. So when you look at the new home building, if these guys are making money, that means they're building. And if the whole sector is moving, and you have not just one, Lennar, 2, D.H. Horton, 3, Pulte Home Group, 4, Toll Brothers, and a couple others behind there, if they're all moving up in sync, I'll tell you what, that tells you that the sector is strong. Now here's the next thing I want you to think through logically. When a home is bought, and it's a new home, it may come with appliances. Maybe you upgrade, so you've got to put an appliance in a house. And you might have to put a carpet in that house, like Mohawk Industries. You may just have to maybe suffer, you guys out there, man's most hated store, Bed Bath & Beyond. So all of a sudden, what does Bed Bath & Beyond do? They actually sell the curtains, the sheets, the towels that will go into those brand new homes. And so does JCPenney's, and so does Sears to a degree. But the moral of the story is, as homes and builders start to break ground in the frozen tundra up north, and they get the commitments to build that house, it takes time to put that house, to slap that new home up. So with that said, I hate to be mundane, but I want you guys to understand there's a rhyme and a reason to this stuff, and if you can just tune out and tune in, tune out the media, tune in the logic, and look through seasonal analysis, I think you'll be able to say, okay, if this is true, if the consumer discretionary sector does start to bottom out and it moves higher, then the XLY, which is that pink thing right there, the consumer discretionary should start to outperform the market. And if we have the consumer discretionary outperforming, you always hear about this term called sector rotation, and you always get that on the news after it's happened. Gee, man, they just sold that utility sector down, but oh, by the way, look at the material sector. It really moved. And so we're going to be looking at different sectors that have outperformed, like healthcare, and we're going to be looking at sectors that are underperforming that start to begin to shine, and the relative strength analysis will help to confirm whether or not we are seeing money moving into the markets. Now it's up to us to have a bit of maybe computer scans that can say, can we use our computer to help us scan for trading opportunities? And the answer there is, why, yes, of course we can. So the next question I ask you is, if everyone's thoroughly convinced that the market can't go any higher, then you need to tell me, why is the advanced decline going higher in association with the move in the S&Ps? Why is the advanced decline in the NASDAQ going up and making new highs in concert with prices of the NASDAQ? Why is the Russell continuing to break out and making a new high, as the AD line suggests? Why is the NYSE continuing to break out? And why is the Dow, which has lagged, but it is now finally moving up? So the advanced decline actually says that this rally is a very strong, broad-based move. It's not just to one particular sector. In fact, down below, this is a weekly chart. And as you can see, we've got little green arrows. And those green arrows means that the S&Ps, the NASDAQ's been in a weekly PPS buy signal, by the way, for the last 3 weeks. And the Russell, which just broke out to a new yearly high. And of course, the NYSE, which, as you can see, the advanced decline on the NYSE on a weekly basis is actually stronger than prices. What I mean by that is simply the old high in the NYSE, we just broke out of this high. Everyone can see that. This old high was at this level right here. And now we have a newer high, which was made 3 days ago, before we made the new high closing price. So we are seeing an association of majority of stocks advancing versus the decliners, and that, my friends, is not bearish. So if anyone was able to share with you, by the way, that on a weekly basis, this is the quarterly, as you can see, it says JP quarterly pivots. The market came down to the quarterly pivots, and as you can see, we're now starting to make an advancing move. The volume action is not stellar, but it is definitely moving up in concert. So it shows that this is a move, and it has been this way. And this has been a message that we've been giving, both not just to our community, but even to some TradeStation users. If you've been showing up, suiting up for work every Thursday for you TradeStation clients, we've been talking about this because I feel it's very important. If I see that there is a chance that this market's done and it's ready to get short, I'll tell you, I am the first guy to tell you we got a slew of exchange-traded funds, inverse leveraged ETFs that we could trade, like QUID and TZA and SDS, that's for either taking advantage of the Russell, the NASDAQ, or the S&Ps. I'm the first one to say, man, we've got all kinds of options trading. I want to be a bear when the market's time, and I'm not afraid of trading a down market, trust me. But the market's not been giving us any signs that it's bearish. It's been cautious. It's been hesitating. It's been a conflicting, kind of confusing a little bit. It's kind of like as I've been saying for the last week or so, it's like the little engine that could. The glass is half empty. The glass is half full. And it's kind of interesting because if you note with me, since December 31st high, the market has tried. As you can see here, it went up to take out the high and failed. It went up again, it failed. That's twice. It went up a third time, failed for the January sell-off. It came up again the fourth time, and it failed. It came up again, and it failed, but it didn't fail a lot. And what our message has been this week with our own trading community is the trend is your friend until the trend ends. And folks, the trend ain't ending, and we were talking about my last conditional change candle. We need to break that level below this daily low. It needs to close underneath that candle. That's a last conditional change, that one right there. And until we close below that low, then this market has room to go. By the way, we did a little exercise in our trading room. I think it was earlier today. The S&Ps, by the way, the S&Ps have had a habit. When we go through these little rallies, I'm going to go take you through a walk-through history. You may be interested in this. This is not really a part of our presentation, but it is an interesting thing. Every time the market has, it has these rallies, and the market stalls and it breaks out, we almost see the market move up about 2%. We almost see from a breakout, the market pauses, and when it breaks out, the market almost rallies about 2%. So we've seen notable times after long periods of sideways action or after a correction when it takes out a high, right? We often see, and when I'm talking about a high, I'm talking about the resistance high. I'm talking about the resistance high. I'm talking about the old resistance high, okay? So every time we take out a resistance, an old resistance high over a period of time, you know, we've seen a market that's just been able to advance about 2%. Now, most cases it's more than 2%. You know, now that we've just taken this area out, it would seem logical to me, I'm not saying it's a guaranteed or a shoo-in, but it seems logical that we could see almost probably a 2% move in the market. And it wouldn't be that far away to see a 2% move in the market this time around, which 2% is, if we only go to 2%, it's about, you know, at this juncture where we just broke out today, which is about 1850, you figure is about 86 or so, 1886, thereabouts. Let me double check my why this isn't coming up correctly. But after you get a breakout of the market, it should be approximately, all right, 1882, 1884, somewhere around in this vicinity right here. So 1880. So nonetheless, a 2% move, you know, hey, what if we get a 2% move in the equity markets and it continues, I want to make sure that if it is capable of that 2% move, which is not a lot, is there volume associated with the move? And while this old indicator's probably got everyone thinking there's no volume in this move, by the way, this little indicator is saying, no, that's not true. And this indicator is saying, hey guys, this is a breakout. We have huge advanced decline market segment telling us that this is not a weak rally. And if everyone was bearish thinking the market's going down, or if there's a large community of people thinking the market's going to go down, then they got a lot more shorts to get to squeeze out of this ball game. Because if you think about it, from the last rally, we did see a correction and it's paused. And sometimes corrections come in two ways. Markets go down and markets move sideways. You know, we just went positive for the first time all year in the S&Ps just today. And so with that said, you know, yeah, we got a little ahead of ourselves last year maybe, but we could see at this point in time, and I'm not here to tell you what next 2 months from now, 6 months, the end of the year, I'm not that good. I'm talking about the current market conditions and what can we do. We are setting the stage up for a new seasonal leg to the upside, because typically the market doesn't really do a whole lot from a seasonal tendency from on or about the middle of January anyway. It's why we call it the January break. And so now with this kind of scenario in the marketplace, we now begin the next leg of another seasonal trend to the upside, and we have some pretty bullish technicals, indicators that we're faced with. So this is kind of like a message that I gave to TradeStation users this morning. The funny thing is, some of you people have also said that today you were confused with the volume, and I think, you know, it just, I'm glad you're here tonight. At least you could see with your own two eyes, I mean, that the volume is drastically different than the indicator with the on-balance volume that Joe Granville presented to us. The thing that, you know, with looking at even with TradeStation, and this is my TradeStation charts, we have the same makeup, the same components, the same, I mean, look at the NYSE composite index. Look at this market here with the advanced decline. If you were trading this red line down here, how bullish is that, right? If this was a stock, if instead of a candle, this is a line chart, how bullish is that? So look what the price has done. I would suspect to say that the amount of stocks have broken out, and we haven't seen the price move yet. What do you think is going to come next? Typically, higher breakouts with the advanced decline projects higher prices. So I just wanted to point this out to you if you are confused, and we now see other indicators that are showing specific indicators that are unique to the stock indices, and it's not just one index. It's the top 6 index, the Dow, the NYSE, the NASDAQ composite. Let's take a look at the NASDAQ composite. This is the on-balance volume. We've ripped to new highs, and so is the volume. The NASDAQ composite hasn't really ripped to newer highs as strong as we would want to see, but that's because a lot of stocks get delisted and changed out of the NASDAQ. So, but the point is that it is moving in concert, and there is sizable volume moving with this trend. And the same thing can be said with the NASDAQ 100. So I wanted to share with you, I think this is an important turn of the markets because, you know, in order to figure out if the market's got sustainability, then I want to be in stocks when the thing starts to turn. I want to be in stocks that haven't moved yet that will enter their seasonally strong period of time. Does that make sense to everybody? Now, Vladimir, I'm about ready to kick you back to Siberia, brother, because you're getting ahead of yourself, okay? And I think it's kind of funny that we get these guys in here, like Vladimir, who's asking a very good question. Are those transports confirming? You're lucky I'm in a loving mood, my man, because I would have bounced you out of my room. You're in my house. Respect me. Now, with that said, I love Vladimir's question because he asked a very important question. We ought to give him a hand because he had the ability to ask a pretty decent question. Are the transportation sectors confirming this move? Well, Vladimir, why don't you ask a better question? When do transportation stocks tend to move up? Just like the consumer discretionary sector. You just saw a chart that shares with you a seasonal tendency that typically you don't get moves, do you, in the consumer discretionary sector? No, you don't. Vladimir gets a free cruise pass. There you go. By the way, Vladimir, you see I had this all teed up for you. You see what this says? The IYT, Dow Jones Transportation. Already teed up, baby. I was getting ready to cover that, but you beat me to it. You're taking my glory from me, Vlad. Take it easy. The funny thing is, look at the transportation sector. You know, you get a lot of these weekly dojis not moving, weekly doji not moving. We had a high close doji that no one seems to want to really talk about. This is the Dow Jones, and you can see the volume here. You know, I would tell you I'd be confused as the dickens to look at that volume versus looking at that on balance volume. And looking at the transportation sector, it didn't make a new high. Give it another week or two because Vladimir, let me show you something, man. And everyone else, pay attention because Vladimir actually did everyone a favor because he asked a very important question. Is there other confirming indicators? Well, the funny thing is, Vlad, look at the seasonal tendency. Typically, we get a seasonal trend that the transports don't even begin to enter a seasonally strong period of time. Look at this, every year from on or about the first week of March. So while people might be convinced that this market's not for real because the volume doesn't look strong or the transportations haven't confirmed, the funny thing is, transportations, they don't even bottom out until the first week of March. What's next week? It's the first week of March. So I think you need to ask yourself, as I said earlier tonight, I said when the news tells you the stock's going down or the news says this isn't going up or the whole sector's going down, the first thing you ask yourself is, are they supposed to go down this time of year? And when do they start to begin their seasonally strong sector? We talked about this in our trading room today. I said now our next topic is to decide, as you can see here, when we look at a particular sector, we've got to say, well, what kind of subsector do we have? What area do we want to look in? Do I want to look at the airlines? Do I want to look at the rails? Do I want to look at what is the next area of opportunity? If this sector is entering a seasonally strong period of time, is there a stock? Are there names that we could look at that might be beneficial? Well, everyone remembers UPS has gotten its just kicked in the teeth. I mean, that's a good definition of kicked in the teeth. I mean, that's a good little downtrend. The funny thing is, even this stock, small little company called UPS, in fact, it will generate a weekly buy signal at what is a very important support area. Look at this now, this green line. This is the quarterly person's pivot. You can see where it says here, JP quarterly pivot. You can see how these indicators that I've created are very powerful. Who in their right mind, if you ever read any of my books, you'd notice you had a high closed doji, the market hasn't gone down, you're at quarterly support, and you're entering a seasonally strong period of time. I'll tell you what, as we start to see in the next week or two, we start to see more volume action confirm. Again, this is air freight logistics. This is just UPS. You got its competitor, which is FedEx. Funny thing is, does this chart pattern almost look very similar to UPS? Does this downdraft, I mean, obviously FedEx is not as clear and crisp, but it had a downtrend, and on or about 2.4, it made a low. Let's go look at FedEx. Let me teach you a little technique. On or about 2.4. You know, FedEx and UPS both made their lows, respectively, on the exact same day. Both stocks have almost a very similar pattern. Sharp downtrend and a slight 45-degree angle uptrend. And so if you take a look at that, you'd say, gee, there's two names in one sector that almost have the same chart pattern. Do you think institutions are buying and selling this stuff and unloading it and loading it up? And it almost looks like it's very similar pattern in nature. So what I'm trying to help you uncover is, how do you connect the dots? What tools are useful? And I think when we go back to our PowerPoint presentation slide that I was sharing with you guys, seasonal analysis helps anticipate market turns. Person's pivots, using multiple time frames, looking to see the market. If I can help train you guys to say what's your importance of checklists, then maybe perhaps, and teach you what these indicators mean, and then, just then maybe teach you how to get and execute an entry level. I'm not telling you every trade's going to be a winner. Last year, we had a great record. Up 100% PA stock alerts. We were only 63% accurate, which means about, I don't know what, only we lost our 4 out of 10 trades lost. That's what that means. Not every trade was a winner. So I think you've got to be able to improve your odds, be more selective, and have better confidence in your analytical skills if you have better tools to help you with those skills. That's the real message. And I think for all you options traders out there, if we, once in a while you're going to get them wrong. I understand that. We're not perfect. But I think you can be more selective and better edged in the marketplace. I wanted to share with you, I talked earlier tonight about the retail sector. And just share with you real quickly on this little number here. This is Sears. Now, I'm going to just zoom this chart up right here. The funny thing about Sears, actually, you know what? I'm going to go to a different page. If you don't mind, I think you'd be interested in this, okay? So I'm going to share something with you. Just to kind of, well, obviously we're looking at something else here. All right, so I'm going to go over and I'm going to put this on a monthly chart. Let's go and walk through history together. And I'm going to get rid of all this other technical gobbledygook here. I'm going to get rid of all this stuff. And we're just going to leave prices up there. I'm going to get rid of stochastics, and I'm going to get rid of on-balance volume. We're just going to go from a pure price standpoint. Let's go back since 2004. All right, so Eddie Lambert buys it, but in January it makes a low. Now in 2004, that was a heck of a wild ride. But look what happened, that was a different time, but it was a altogether wild ride. But look what happened in January, another low, okay? And the market went up. Look what happened the following year, a market low in January. Let's take a look at the worst possible time frame. After a huge rally, the market's had this huge rally, pulls back the end of January, you make a low, and you still see a rally going into April. Let's take a look at when the abyss of the world turned on us. 2007, Lehman Brothers, bye-bye. Bear Stearns, bye-bye. The world's falling apart, but yet steers can still manage at the end of January to post a low and still manage to maintain and trade at a high going into the end of March and into April. From the low of January to the high. Not a great trade from 74 up to 96, still a $24 move in the worst possible time of our financial history. Finally, January, but it was probably around the 1st of February, so we were off just by a shade here, and we still found that by April, we saw a nice little rally. Not a big one, from 29 to 53. Again, over and over and over, and again, I just conclude with this year, okay? So not a great trade, but you can bet your bottom dollar some years are better than others. Seasonal analysis, certain stocks, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 years in a row. I bet you next year, 95% of you that are in this room tonight will forget about this trade. 95% of you guys will forget about this trade, and here's why. You're human beings. You probably won't remember what you had for dinner 4 nights ago, a week from tomorrow. How could you? We got life that gets thrown at us. We have so many different things. You got the family, you got the holidays. You're not going to remember this. You could write it down in your journal. You'll forget. If you're like me, where did I even put the damn journal? So having some semblance of having a trade, a diary, trades to look at, this is kind of a neat thing. Sears is an altogether different animal. And, the funny thing is, I just wanted to share that with you guys because it's something that we talked about. We've been talking about this trade for about 2 months. And the majority of our friends and clients that are in this room are in this trade. So we did a stock replacement strategy, a longer-term stock replacement strategy. So there are ways that you can, instead of taking these binary, what I consider binary earnings reports. I don't know if you guys are, if you've gotten tired of the options matrix game, implied volatility, historic volatility. Are you beating the market? Is it going to go up for earnings, down for earnings? Is it going to beat what the, option analytics are trying to suggest? Or do you want to kind of nail down a systematic approach to the market and find out what stocks and what sectors can you get in? Vladimir, thank you very much. I hope you appreciate my sense of humor. I was teasing you, man. About that aspect, he asked a very important question. The funny thing is, I was coming to the answer, which is transportation. In fact, if you look here in this little chart here, this is my relative strength chart. It says IYT, and that's the transportation. The KRE is regional banks. I got those two in there for a darn good reason. Last year, the best performing stock sector, the best performing sector was the regional banks, probably least known by the masses. No one really saw that coming. It wasn't Citi, it wasn't Bank America, it wasn't JP Morgan, it was the KRE. It was up 43 almost from year to year, from the January timeframe at one point, almost up 43%. It was the best performing sector last year. Amazing stuff. Now, what are we doing moving forward? Trading bonds. How many guys are looking at bond prices? And, I was a little spooked by bonds myself, in the last couple days because we've seen a buy signal and the bonds have started to move higher. The funny thing is the seasonals actually dictate bonds do move higher. I'm just not sure if we're going to see a blow-off rally. Maybe it's, adjustments for the quarterly basis. If there is any rhyme or reason, typically this is a seasonal trend for bonds, but from about the middle of February to about the end of the first week of March, bond prices typically move, and then after that, the rest of the month is very tough for the bonds pricing. So you got 2 ways to trade it. Maybe you have a little bit more short-term strength in the market, and we could see an upside move in bonds from a seasonal perspective, or wait for another week or so, look for some inherent weakness in the market in the bond pricing, and then we got a couple ways to trade bonds on the short side. A couple ways. Many of you will say, well, we'll go with TBT or we'll go with TLT. Another way of trading this market, folks, is looking at one of the forms of analysis that we put together relative strength we talked about in the first page of our PowerPoint presentation. We talked about relative strength. Pairs trading, I called it, right? So if we take a look at this, I want to share with you this chart here. And this blue line. This blue line is a spread chart, a pairs trade, a relative strength, if you want to call it. It's the difference between the 10-year notes and the 30-year bonds. Now, typically, look what happens when notes and bond prices rally. Typically, when the notes and the bonds rally, typically you get the spread widens. It becomes more positive. In other words, goes from about 5, it went up to 7. That's being more positive. The trend of the notes is up, the trend of the bond is up. What happens when those go up? Typically the stock market goes down. I mean, we could do this all day long. They go down, and it goes up. I mean, we'll do this all day long. It goes up, and it goes down. Now, we're kind of in a situation that's kind of perplexing, but there might be some monetary flow. Notice that we are right now short-term in nature, very short-term in nature, starting to see a move up in the bonds, up in the notes, and the stock market's moving up. But if the stock market really starts to outperform again, that's when the bonds and the notes will start to move lower. Now, what's intriguing is that we are sitting here at a technical spot in the market on the knob spread. And what I would be looking for is I'm going to be looking for signs of inherent weakness in the market. And if we get and I'm going to switch this over to a 240-minute, which is about a 4-hour chart. And if we start to see a trend change, we start to break the trend in the knob spread. If the knob spread starts to give me a change of breaking that uptrend, I'm probably going to get a trigger of a short position in the bonds and the notes. But this is a trade that you can take, which is less risky. It's less risky than an outright position. It still has risk. I didn't say it was risk-free. It's less risky. But in the knob spread, we're trading up against the high that we made back here at the beginning of February. So in the next couple days, we have an opportunity for a professional trade, or at least if you don't want to feel comfortable in taking a knob spread, you'd sell the bonds, buy the notes. At least you could use this indicator to confirm if the market does peak out, bond prices that is, because the seasonal chart says that what happens this time of year? Well, it typically rallies. We're about right here in that seasonal trend, okay? Because March 1st is Monday, or the first day of trading of March is Monday. Let's call it that way. So within tomorrow's Friday, it's the last day of the week, it's the last day of the month. We've got a lot of different changes from a seasonal perspective heading our way. And we've got a whole list of stocks I wanted to introduce you guys. So if you're coming back with me on Saturday, at least show up Saturday morning if you're, got nothing better to do except for shovel snow up north. If you're down here in Florida, you're probably going to go to the Honda Classic right down the street from us. So what I could definitely tell you guys that we have some interesting turns in the market. All right. And I don't know if you liked some of the stuff that you saw tonight. I mean, it wasn't the regular. For some of you, it might be a little esoteric. It might be over your head, but that's good. It should be over your head, because if you've never seen it before, that's good. Think of it that way. Be positive about it, because, I think you got to trade and you got to have confidence in what you're doing. And if you're using the same old indicators, if you're listening to the same old thing and you're having the same old results, try something new. May want to step over into our world, Person's Planet. I think you'll find that you'll get a little bit better education, and I've definitely given you guys, in the past, many of you have come back and you've seen our information before, and I know I got a lot of students in the room tonight, and they know that this is the kind of stuff that we've been talking about in our trading room, and what keeps us on the at least of the best side of the market for the time being. So anyway, we want you to be at least introduced to different techniques or techniques you may not be familiar with, or to give you an idea, hey, there are indicators out there that are giving us a better sense of direction in the marketplace. So hopefully tonight at least introduced you to several key things. On balance volume, seasonal, thanks to Mr. Putin over here, who took time from the situation in the Ukraine to come visit us and ask about the transportation sector, even though I was getting ready to share it with everyone, Vlad. Come on, man. He's going to be in Kiev. Good night. All right. So with that said, you guys, if you want to show back up, I'll see you here Saturday. Thank you all very much. Just to let you know one thing. Every Monday, every day, not just Monday, but every day in our trading room, we come out with this is actually a sample worksheet of what we do every day. What I'm trying to do and turn my traders into professional traders and get them prepared with what is faced in front of them, not just from what reports come out on a daily basis, what earnings come out, what buy signals we have on a daily, weekly basis, and potential stock trades. Well, we were in Ross stores, actually. We got out of it before earnings. We mentioned that to everybody. We were in eBay. We've been in eBay. As you can see, this is from a couple weeks back. We were in eBay and actually did a stock replacement strategy. We bought these July double nickel calls. They had a 49 delta. It was kind of a stock replacement having more time. Some of you guys may know this. For 320. eBay, these are 158 days to expiration. Anyway, this is the kind of stuff that we do and we put out for our traders every single day. So I want you guys to come back Saturday. I think we got, tonight we got at least the introduction. At least if you can't be Saturday, you understand that we've got several stock sectors changing, coming into their own life. And as they start to come into their own life, they may be what leads the market higher. Think about this. If the transportation sector has been lagging, what happens if everyone decides to buy the transportation stocks? That's going to probably weigh on that much more positive gain in the U.S. equity markets. What if people say, gee, the bank stocks could make some more money? And what if the bank sector starts to improve some more? That will weigh on a positive effect on the index. And then everyone on CNBC and Bloomberg and the newspapers will say, well, gee, look at this sector, it's finally moving. And instead of being useful, saying, gee, that sector could move and it would cause the index to move higher. And that's my message to you. So I hope you join us on Saturday. I look forward to seeing you. Don't forget, if you're thinking of coming on that cruise, we do have a couple people that would like to split a room. It's if you don't know anything about the cruise, it's the Allure of the Sea. And it's going to be a great time. It's the Eastern Caribbean. We're going to St. Thomas. We're going over to St. Martinique, a great island. We're going to be doing a lot of great education, trading, and getting together. So if you have more questions, come visit our website, personsplanet.com. We'll send you a reminder link. We've got more information packed for you for Saturday. I hope you found tonight's class useful, helpful, and you guys have a great day tomorrow. We'll see you Saturday here. Have a good night, everyone. Thank you.